Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, June 1st, 2009. We begin in Australia, where retail sales rose 0.3% in April, the second straight month that sales were up, though the figure was lower than forecast. Consumers have seen their incomes buttressed by government handouts, while borrowing costs are at their lowest level in half a century. A separate release showed the manufacturing sector's contraction easing in May. The country's manufacturing PMI rose to 37.5, still below the 50-point mark separating expansion from contraction, but the highest reading in the past 7 months. New home sales in Australia rose by 0.5% in April, the fourth month in a row that sales have been positive. It's another sign that the recession in Australia may be abating as the government's fiscal stimulus plan works its way through the economy and low interest rates keep down borrowing costs. A fourth report from Australia showed first quarter company operating profits down 7.2% compared to the fourth quarter, a second straight quarter of weak results as the global economic slump cut into sales and revenues. The decrease was larger than expected, though it was smaller than it was in the fourth quarter. Finally, a fifth release, the TDMI inflation gauge, showed Australia's inflation down 0.3% in May, while the annual pace slowed to 1.5%. That puts the annual rate below the target band of 2% to 3% set by the RBA. The data opens the door for another cut by the RBA if it feels that the economy is continuing to slide, and an even looser monetary stance is warranted, though that seems unlikely when the central bank concludes its meeting in tonight's Australian session. The Aussie-Yen pair broke above resistance near the 76 level in Friday's trading, and today, after retesting that level as support, the pair shot up 250 pips, claiming the 78.50 area. That puts the pair at its highest level since October 6th. In addition to the reports on Australia's retail sales and housing that show that the recession there may be easing, the Aussie was boosted by a pickup in demand for commodities and data out of China showing global growth may be recovering. The Aussie climbed against the Greenback as well. In the UK, housing prices were flat in May compared to April, the first time that home prices did not drop in 20 months, according to the survey of real estate agents conducted by HomeTrack. The data is an indication that the problems in the housing market may be easing. On the year, home values were 9.6% lower, still an improvement on the previous month. The UK manufacturing PMI rose to 45.4 in May, adding to signs that the UK recession may be past its worst phase. Though the figure remains below 50, which is the level separating growth from contraction, May's figure is the best in over a year, and it was better than anticipated. The pound-dollar pair rallied 300 pips in today's session, setting an intraday high just below the 1.65 area. The positive UK housing and manufacturing reports gave pound bulls the ammunition they needed to continue Friday's rally, which had broke above the 1.60 level. The next level of long-term visual resistance is the 1.6650 level, a major high from October 30th. The euro-pound pair saw a sharp slide in today's trading, favoring the pound. The pair slid 130 pips to the 0.86 level, breaking below last Wednesday's low. Puts the pound at its strongest level against the euro since early December. In the U.S., the manufacturing sector continues to see its pace of decline slow as today's ISM Manufacturing Index rose to 42.8 for May from the previous month's 40.1. The new orders index rose above 50 for the first time since the recession began, a signal that companies may have run down inventory and are placing orders once again. The data adds one more piece of evidence that the U.S. recession is starting to ease, though the employment index did not show any improvement. U.S. consumer spending declined 0.1% in April, following a 0.3% drop in March. The figure was slightly better than expectations, but shows the weak state of the U.S. consumer, despite a better-than-expected increase in incomes of 0.5% for the month. With consumers and families saving their incomes and not spending, the savings rate rose to its highest level in 14 years. A key measure of inflation watched by the Fed, the core PCE price index, rose by 0.3% in April, higher than expectations, which brought the annual rate to an increase of 1.9% compared to March. The Fed watches this index closely for signs of inflation, with their preferred range somewhere in the 1.5% to 2% range. Finally, construction spending in the U.S. rose 0.8% in April, a figure that was higher than forecast. It suggests that the housing slump may be easing as more commercial projects got underway. The euro advanced against the dollar, hitting the 1.4245 level, but its gains were capped there and the greenback managed to pare some of its losses. Some of the recent rally in the euro has been primarily driven by greenback weakness, and today's data may have helped to stem that tide, if only for a little while. The other big news coming from the US was the bankruptcy filing of GM, which should come out of bankruptcy a more viable company, though 60% of it will be owned by the US government. The bankruptcy news of GM did not stop US stocks, which saw very strong gains, and managed to hold those gains in late trading. The Dow index was up 2.6% or 220 points, and the Nasdaq and S&P 500 were up 3% and 2.6% respectively. The dollar-yen pair, which had declined in Friday's trading and during the Asian session overnight, surged in the New York morning session, rallying 220 pips to the 96.90 level. The greenback held most of those gains as today's stock trading session came to a close. Tonight, look for more data out of Australia as we get data on building approvals and its current account. That will be followed with the Reserve Bank of Australia's interest rate decision. Overnight, Switzerland will post its GDP data for the first quarter and its SVME PMI, a measure of economic activity. The UK, meanwhile, will unveil data on mortgage approvals and lending and another house price index, though its release is subject to change. Tomorrow, there is only one noteworthy release, which is U.S. pending home sales. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.